Coming up, the Wall Street Journal slams HIMS and finds out something everybody already knew. I'll explain to you the risks as well as giving you valuations for the stock. I also entered a new position on my Trading 212 £40,000 ISA. Most tech stocks are down about 10%. However, I want to talk about two absolutely dominant stocks that I have in my portfolio that have allowed me to keep most of my gains. So to start off, we have HIMS being attacked by the Wall Street Journal. Here's the headline. They wanted a quick fix for hair loss. Instead, these young men got sick. HIMS and other telehealth firms make finasteride easy to get and don't have to disclose the side effects in ads. So for those of you who don't know what HIMS is, here's a short clip.
Okay guys, ceremony starts in 5.
One sec, just got a HIMS real quick. HIMS? Yeah, HIMS. Him too.
HIMS for ED. Always works for me.
I'm HIMSing right now. So simple, so convenient. HIMS.
Weight loss by HIMS, boys. You gotta get on it, son.
For care that's doctor trusted, convenient, and personalized, get started today at HIMS.com.
If you want further explanation as to what HIMS is, watch my previous video. The Wall Street Journal goes on to make these 3 points. The telehealth companies, mainly HIMS, are aggressively marketing hair loss medication to young men. Some of the patients said they had serious side effects and didn't realize they were possible. Finasteride, the generic name for Propecia, is widely described but has been linked to serious side effects in some men. HIMS say they disclose side effects and other risks on their website. They say clinical studies show finasteride is effective and side effects are rare. Now, what do I think about this article? Well, I feel that the Wall Street Journal makes a point here. We don't actually know what kind of legislations are to come with these telehealth companies like HIMS. HIMS is growing so fast that there's almost bound to be some legislation that comes in. So what kind of legislation could this bring? Well, if legislation happens, I feel that it would be most likely to affect HIMS advertisements. So they'd probably have to disclose the side effects in an advert. But how much effect could this have on the business? If we take a look at HIMS, we realize that they spend a lot on sales and marketing. In Q4, they spent $678 million. Out of all their expenses, it is by far the largest. Their growth style is through sales and marketing. As an investor in HIMS, I do actually see this as a potential risk. Considering just how effective their marketing campaigns are, having them put side effects in the marketing campaign could seriously discourage members from joining the recurring revenue streams or buying a product from HIMS. It does have the potential to be a headwind and draw down sales. However, we need to remember there is no legislation yet, and Trump is very anti-legislation. Not that Trump would have a major input into such things. I'm still positive on HIMS, and here is another reason why. For some reason, the Wall Street Journal has only just realized that HIMS and hers is to keep offering compounded Ozempic and Wegovy after the FDA deadline. Now, I spoke about this in my last video, but essentially, the FDA has stopped HIMS and hers from selling GLP-1s, which is a weight loss drug that is extremely popular at the minute. Those GLP-1s are also known as Ozempic or Wegovy. The FDA has told these telehealth companies that they are to stop producing and selling by second quarter next year. However, it is not in the legislation that HIMS and hers should stop offering personalized dosages of the compounded drug. HIMS and hers will keep offering compounded versions of Ozempic and Wegovy tweaked to individual prescriptions. They call this personalization. We know that looking at HIMS revenue, HIMS have said 50% of their revenue is in personalized doses. We do need to remember that only about 225 to 250 million came from the weight loss category. Now, let's say that the GLP-1 section of the business is equal to the rest of it, in that 50% of all sales are personalized. If we say that, then we're looking at 110 million of revenue in 2024 was directly from non-personalized commercial GLP-1 sales. This would mean that only about 7.4% of 2024's revenue came from commercially available GLP-1 weight loss drug. Now, as we know, HIMS and hers may no longer be able to sell the compounded GLP-1 weight loss drug, the semaglutide. I think this ends after the second quarter. We know that they're going to continue to serve personalized doses to customers. As well as this, they're going to continue to offer liraglutide, which is slightly different to semaglutide GLP-1s, which is less effective, but there will still be a market for it. So we've established, using some basic assumptions, that Hims and Hers should lose about 7% of revenue by cutting out the GLP-1s. Now we need to remember that Hims revenue is growing at 70% year over year. I feel as if a 7% knockoff from this is not going to be anything major. It's not going to be too big. Plus, they're going to have that bonus 1 to 2 months next year where they do get to sell GLP-1s. So they'll have half the year where they can actually continue selling these drugs. Their revenue, I think, is going to continue to go up at a very fast rate. Now, I don't see this company going from a 70% growth rate down to 0 all of a sudden. With the revenue growth comes the incredibly quick free cash flow growth. You can see here that they've gained about 150 million in free cash flow in 1 year. Now, I expect them to probably do this again. This would put them at around $350 million in free cash flow at the end of next year. And if we have a look at that on a free cash flow yield basis at $34 with a market cap of 7.43 billion, you're looking at a free cash flow yield of 4.7%. This is highly undervalued, I believe, at its current price of $34. I think the Wall Street Journal personally is a bit of a bear when it comes to Hims. I think the fact that Wall Street Journal is only just finding out that Hims is going to keep offering personalized dosages of GLP-1s just shows how ignorant they are of the potential that Hims has as a business. If we have a quick look at this free cash flow valuation model that I've used, we can estimate that the free cash flow growth rate of Hims will be about 20% year over year for the next 5 years. This wouldn't surprise me, seeing as that I'm expecting free cash flow to grow about 60% next year alone. Let's say that it trades by the end of this at a free cash flow yield of 2.8, which it currently trades at, and my desired return is 15%. From current prices, the return should be around 18% per year. Now, the entry price for a 15% return, which is what I'm looking for, is $40.21. So I have entered just below that, about $40. So I think that I will receive about 15% return from this. If you're buying in at today's prices, you could be looking at an 18% return. Now, let's say the free cash flow growth actually grows a little bit quicker than that. We go 25%. So a free cash flow per share growth rate of 25%, I feel, isn't unrealistic. You're looking from today's price at 23.34% annual growth rate on your investment. I actually bought in at $40. I'm going to continue to add little trickles to Hims here and there as and when I get paid. I'm currently 14% down on my position. It was a bit worse yesterday. I think it was like near 20%. I continue to stay bullish on Hims. Next up, I have started a small position, a watcher position in a new company, and that company is Fair Isaac Corporation, also known as FICO. Now, you may have heard of FICO. They do the FICO scores. I only entered a little £20 position. That's just because I'm watching the stock, making sure that I keep tabs on it. I really like this company. It's really, really strong.